If you want to understand the housing boom and the housing crash, Bob Schiller and Carl Case say, take a look at buyers and take a look at their expectations. And they find sort of two things that feel like a little bit like there's a tension there. First thing is when you ask buyers, it turns out they have a fairly good understanding of what's going on with the housing market, what's been happening recently, and also what might happen next year. So they're actually quite well attuned to things. But if you go back and you look through the bubble period and you ask people, how much do you expect house prices to rise over the next decade? It's astounding. People thought house prices were going to rise at 10 or more % per year over the next decade. They thought this was just a license to print money, and as a result, they were out there buying houses like crazy. The good news, I don't know if you call it good really, is that people's expectations now are more moderate and a whole heck of a lot more sensible. So that bubble mentality is gone. I think that's probably good news. People can make better decisions. But in terms of looking for a turnaround in the housing market, when people don't expect house prices to rise a whole heck of a lot, they are going to be a little bit reluctant to enter directly and quickly and strongly into the housing market. These guys are behavioural economists. In fact, Bob Schiller may win the Nobel Prize for behavioural economics one day, and so he has a different research method. He asks people what they're thinking. And it turns out when you ask people what's going on in the housing market, what's motivating their decisions, they don't mention HAMP, they don't mention HARP, they don't mention Fannie, they don't mention Freddie, they don't mention any of the alphabet soup of housing whatsoever. So it really seems like we know that take-up on these federal programs hasn't been that great, but we also learn that they just don't have a big mind share among home buyers.